Hello everyone, welcome to my channel. Today, let's predict Nvidia stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. Nvidia stock fell slightly last Friday, but the trading volume on that day was further reduced. This shows that the market is trading very cautiously, and investors seem to be waiting for the results of the trade negotiations between the United States and China. In fact, the upward trend of the stock has not been destroyed. Although some funds may have flowed out of the stock last week, the cumulative outflow amount is limited, and the long capital that drives the stock price up does not seem to have withdrawn from the market on a large scale, which we can see from the hourly chart of the stock. We can see that the stock price accelerated to bottom out between April 4th and April 10th, and then the stock price rebounded significantly, and this process released a large number of transactions. There seems to be a lot of long capital involved in the stock here, because the stock price fell sharply again between April 16th and 23rd, and then rebounded again, and the stock price did not fall below the previous lowest price. This shows that the stock is once again supported by bullish forces and is trying to push the stock price to a higher level. But the question now is, in the past 2 weeks, has the long capital that entered the market at a low level previously exited the market? We have seen signs of long capital intervention at some key nodes in the past 2 weeks. In the past 2 days, the stock seems to have been sold by bearish forces again, mainly because investors may be worried that the trade negotiations between the United States and China may end unhappily, so they sold some chips to avoid the risk of stock price correction. But from the perspective of trading volume, the accumulated outflow of funds from the market does not seem to be much. The stock currently has a large number of positions distributed in the $104.10 to $118.50 area. This means that the stock is currently in a pressure area, but in the past week, the stock has not released too many transactions in the $110 to $118.50 area. This shows that the market is still trading very cautiously. I think the market is more inclined to push the stock price higher, but there is a lack of catalysts. The optimistic thing is that the trade negotiations between the United States and China have made positive progress. The stock rose more than 5% in pre-market trading on Monday, indicating that investors who entered the market to buy the stock earlier made the right bet. After trade negotiations between U.S. and Chinese officials in Geneva, Switzerland, the two sides agreed to significantly reduce the high tariffs previously imposed on each other, but only for 90 days. According to the agreement, the reciprocal tariffs between the two countries will be reduced by 115%. The United States will temporarily reduce tariffs on Chinese goods exported to the United States from 145% to 30%, and China will temporarily reduce tariffs on U.S. goods exported to the United States from 125% to 10%. Both sides agreed to take the above actions before Wednesday. Next, the United States and China will enter a long negotiation cycle. Although neither country wants to decouple, and high tariffs have some harm to both countries, it does not seem easy to reach an agreement that both sides are satisfied with. The political systems of the United States and China, as well as the relationship between politics and economy, including ideology, are different. Even if an agreement is reached, the situation may be another matter when it comes to the implementation stage. Therefore, the impact of the trade issues between the United States and China on the stock market is a long-term one. Of course, the positive results of the negotiations between the two countries may be a small rise for the stock market, but I think this catalyst may be digested quickly, and then the market may enter a consolidation cycle again. In addition, Nvidia is scheduled to release its first quarter earnings report on May 28th. The market generally expects the company to report earnings per share of 89 cents, a year-on-year increase of 45%, and revenue is expected to increase by 65% year-on-year to $43 billion. This growth is expected to benefit from the continued high demand for the company's GPU chips for generative artificial intelligence applications. Of course, such expectations do not mean that Nvidia's stock price will soar after the first quarter earnings report is released. We need to see what else will happen at that time, including the off-market situation. However, Wall Street analysts are still optimistic about the stock. According to the stock ratings of Nvidia by 40 analysts in the past 3 months, the comprehensive rating is strong buy. Among them, the buy rating accounts for 85%, the hold rating accounts for 12.5%, and the sell rating accounts for 2.5%. In late April, Jay Goldberg, a senior analyst at Seaport Research Partners, gave Nvidia stock a target price of $100 and a sell rating. Goldberg believes that given that Nvidia has reached the limit of its order capacity for Blackwell in fiscal 2026, it will be difficult for it to exceed Wall Street's high expectations. Goldberg also expects companies to take a hard look at their spending later this year and in 2026. He believes that companies are still exploring the application scenarios of artificial intelligence in the real world, which will lead to a slowdown in AI spending orders in the coming quarters. These analysts give Nvidia an average target price of $166.50 for stock, with a high of $220 and a low of $100. This reflects that most analysts are still bullish on Nvidia stock. Let's go back to the daily chart of the stock. At present, there is still reason for the stock to rise further in the short term, whether it is on the market or on the market. As mentioned earlier, on the technical level, the stock seems to have accumulated a lot of long capital in the low area before, and these long capitals have a strong demand for profit exit and further push up the stock price with major off-market positives on Monday. But it should also be noted that if the stock price soars sharply, the stock will also face callback pressure. If the stock price rises by more than 10%, the stock needs more catalysts to rise further. Otherwise, the stock will face the risk of a correction. So I think the profit margin for investors who enter the stock above $126 may not be large. As for the target price, it is set at around $130. Okay, guys, this is my price forecast for Nvidia stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and see you in the next video.